TGIF, everybody. How you doing today, AJ? Brand, Michael Bergman. Yes, I noticed that on Tesla. How's the team doing today?
Hey, good morning,
Morning, Dale.
Hey, guys, what a week.
It has been crazy. Go ahead, Stel.
No, I was just going to say good morning, and I'm happy this week is over because I'm done with central banks, seriously.
Okay, here's the winner of the ugliest weekly candle. Right here. That's the ugliest. I mean, compared to, I know Euro came off, but, you know, still an up week.
Yeah, look at this. Look at the sterling, the false breakout that it set up this week, too.
Yeah, and you know, the S&Ps was a classic example of what Blake says, false breakouts lead to breakdowns, or, you know, anyway, so that was it. Yeah, cable, pretty lousy candle. The worst candle in the currencies I follow is Aussie. So
yeah, Aussie looks like shit. Excuse my language. I didn't mean to say that. Sorry, earmuffs, kids.
It looks like duty. So
it does.
Yeah. And pretty ugly. Well, I don't know, not that bad. Anyway, but hard to find something to buy.
Here's the crazy thing, though. Like you look at the FX market, and obviously that you take the S&P and you go, wow, that's ugly. You look at the dollar and look at everything around, and then you look at like what happened in the euro yesterday, and then realize that, and I'm sure you guys covered this in the flow show, Stelios. Some of the ECB comments overnight, like, oh yeah, ECB Centero sees very low probability of returning to 75 basis point rate hikes. However, he also says that ECB is determined to hit 2% inflation target quickly. He didn't and you know, he didn't mention like, hey, we're gonna mosey our way on over there. No, there's the hawkish comments, man.
Was it Lagarde who said, one of them, I can't remember, I think it was Lagarde, who basically implied we have at least 3 more 50s coming?
Yeah,
I think I don't think it's coming. I don't think they are. They're
no,
saying
I don't
this
think
now.
so either. But that's really tough talk. I mean,
they're talking the talk. Yeah,
they are talking the talk, but you look at the euro and it still trades. I mean, it's trading really close to 106, and everybody should know if it breaks 106, you know, you can stick a fork in the euro for a little bit. So I'm
looking to buy it at 98 in the next several weeks.
You know, hey, it's still I'll let you talk about that here in a second, but it's interesting you say that, Dale. Last night I had an opportunity to sit with I did a show with Chris Weston, because he's going back to the UK for like a month with his family. He's taking his whole family, you know, that's where he's originally from, even though he's been in Australia for like 20 years. So we were talking, and we were doing like this special show for, you know, how we view 2023. And I don't want to give it all away. And you know, I clearly state, as he does as well, it's hard to look that far in advance. I mean, we have a hard time as traders trying to figure out what's going to happen 15 minutes from now, let alone what's going to happen in the middle of 2023. However, one of my big trades of next year in my mind, and this is just me thinking about it all, is I agree with you, Dale. I think the dollar is in process of carving out a big top. However, I think it's going to be strong for the next several months because we are going to have some serious recessionary fears, not only in the US, but globally. And the dollar is going to be the safe haven trade
because of risk off.
I believe that you want to sell dollars on rallies, but I think the dollar can. And I think the euro, and it's funny, I actually told Chris Weston yesterday, you must have been sitting in my office somewhere last night. I said, I'm looking to buy the euro below parity.
Yeah,
you know, next year.
I have a bug in your office.
You do? You must,
a cockroach.
You know, like that, or you're just a pervert. God,
Oh yeah. I was looking through the window, heard that comment. But yeah, because you know, when you look at it, this whole thing complete. I'm looking at it, and Greg is here. It's going to be great to get his view. Is that we completed one wave here, so we could get a wave 2, and correct this. And I think it might surprise people. 108 I think is pretty doable. But what if we rally to 111, 112 and then roll over again? That's what I think might happen.
Right. No, I'm with you. And I look,
that should give us a 110 or lower cable.
Yeah, and we have to imagine that the stock market is really turning at a very key level this week. And I think there's going to be opportunities to buy the stock market between now and the year end, and I do believe it's going to be the week after Christmas. So we probably have next week is going to be, especially if we close at these levels, it's going to be probably a pretty ugly week. You're going to get a little bit of de-risking as we go into year end. I mean, look, portfolio managers have really underperformed the market just in general this year. I mean, think about this, Dale, and Stelios, I'd love to hear your comments, and Steve as well. When you have portfolio managers that have a traditional mix of stuff they carry in their portfolios, the traditional 60-40 mix of bonds versus equities, and you have both of them underperform grossly. Generally speaking, and I'm just going to say generally speaking, portfolio managers across the globe in their traditional mixes have underperformed the markets because they got hit in stocks. They also got hit in the bond market. So they're playing a lot of catch up. And when you're now that you're faced with the idea that, holy crap, I'm not going to be able to buy S&P above 4,100 and chase it to 4,200 and just leverage up a little bit and make back some of these losses that I've had this year. Now I have to de-risk going into year end, because now I need to minimize my losses. And instead of me underperforming the market by 2 or 3%, I need to make sure I don't underperform by 4 or 5% and get serious redemptions. So we could get some de-risking after we get through OPEX today, and I think next week could kind of be an ugly week. And so anyway, I just wanted to throw that out there. What's that?
I mean, if you want to really be bearish Apple, you could take the move from 176 to 36. That's 40.
Dude, look at that consolidation that you've been looking at, Dale. If that thing breaks down, I mean, we could see 10 points lower pretty easy, right?
Easy. Yeah.
Easy.
110, like 110 even.
Yeah. I mean, and then think about how heavy that weighs on portfolio managers and hedge funds.
Look at that weekly. So here's the 200 week.
Well, your iPhone stopped working as well.
My iPhone's dead. It stopped working. Just because everybody's using Samsung now. Not like no one said no one.
So we were talking about the stock market in among other things on the Flow Show, and the interesting thing is that what's driving this, because it's not rates. Because after the FOMC, yields actually dropped just by a little bit. So this is and what's driving the dollar? And
it wasn't the dollar either, Stel. I mean, the dollar was cooperating till yesterday.
And what's driving the dollar was the next question. We talked about that, and we think that the dollar is being driven by stocks falling. So we have risk off. The knee-jerk reaction is to buy the dollar to smash the metals, the usual thing. And the question is, where do we stop? I agree with Blake. I said on the Flow Show, I think the rest of the year and probably early next year, so maybe January, we're probably going to see continued risk off. Maybe not a wild move, but I think it's going to be grinding lower. But I don't think we're going to get to the half of the end of the first half of next year like that. I think that there's going to be a turn. Central banks are already preparing us. The Fed told us that they did 50, but most likely they're going to do 25s now going forward. And how many of them? The Bank of England, you saw 2 members voting for no hikes, which is crazy. The ECB is kind of the lone wolf at the moment, still talking the hawkish talk, but I think they're also going to start backtracking on that. I actually agree with Nick, the interview that Blake did last night. Jovanovic, yes. I really like him. He's very aggressive sometimes, but a wealth of experience there. And he says the Fed might be actually done hiking rates. I don't think so.
Could you imagine that?
I think they have a little bit more to go, but I've said this, I've been banging on about this for a while. I think inflation is going to start dropping pretty quickly. And in the first quarter of 2023, when we get to February, March, when we start comparing a rate of change of inflation to last year, which was, big bump due to the Ukraine war and everything. So when that happens, I think central banks are going to have no hesitation in stopping what they're doing, giving us a dovish talk. I don't think they're going to start cutting straight away. I disagree with that, but hiking is going to be done, tightening is going to be done. And that's what markets want to see, because I think we all know at the end of the day, if you close your eyes today, you open them in 10 years time. I know we might be dead in 10 years time, but you do that, you can pretty much guarantee equity index is going to be higher. Everything's going to be higher. Inflation, by default brings everything higher, but it doesn't go on a straight line. So we're seeing this these corrections come and go, the big one being COVID. And I think this is another one. I think we're going to probably test the pre-COVID highs. I've been talking about this for a while, 333 in the S&P, 3,300. It's not out of the question. And everybody...
Look at the third drive line down here, Stel's coming in right where you just said it.
There you go. That I think that's coming. Of course, I could be wrong, but I think that's coming. So we have to be prepared. And as with everything, when you're trading, try to resist the temptation of going in too early. These moves sometimes take time to develop, and this is what I'm looking at.
And speaking of which, let's not forget that today is triple witching. It's options expiration.
Yes.
There's a lot of expiries that are around the markets. You just kind of got to be aware of. Dale, you mind if I take the screen?
Go ahead. No.
Okay. Oh, and by the way, Grega Horvat's going to be here today. You guys are in luck. I don't know if he's here right now. He is. Hey, Grega, before I let you take over, I want to talk about a few other topics. And Grega, we're happy to have you here. Always nice to have an Elliott wave view of the markets, because I always tell people it's one of those things, like, it doesn't register in my mind, like chemistry. That doesn't work for me. It doesn't matter how much I study and how much I would study in the past as in my youth. Chemistry just doesn't register in my mind.
And you don't have any with women either, right?
That's correct. That's not so funny. But no, when I look at Elliott wave counts, I love having like Grega around, because he's really good at, obviously anticipating, turns in the market using different wave counts. And that's, I love his work. And that's why having him on the team here is awesome. So, and you can get all of his work about these 30 instruments right here, but we've got him live today. So that's going to be great to get his views instead of, trying to read through it all right now. We can just kind of pinpoint some things. So if you have some questions about any wave counts on any instruments that you might be looking at, bring them, because Grega can check it out. But I want to talk about just a couple other things. Going back to when you're on ForexAnalytix, just if you want to read through some of these comments that came, during the European hours. I mean, read read all of these ECB comments. I mean, it is crazy how hawkish they are, just crazy. And then, you look at the euro and you go, well, the euro is really underperforming, right? Well, and this is the chart that I was talking about with the euro, just in general. I was looking to sell a move up here yesterday. For those of you that weren't on with us yesterday, I did get short the euro up near these highs, and then I closed it down here because this is a big bull flag pattern that was completing. But the fact is if we start breaking through 106, this support right through here, and especially this trend line right here, I don't care how bullish the talk is that's coming from the ECB, price action is going to be bearish. And so, you can say, well, I'm a bull because this is what the ECB members keep saying. Yeah, it doesn't really matter, because, we get a big reversal here and people are going to be forced to sell. Now, with that being said, I think the euro is a great purchase against other currencies. We were just talking about
euro pound was a screamer yesterday.
Oh, this is a case of one of those markets that goes farther than I thought. Remember when I bought it here yesterday?
Yeah.
when we were on air.
You're right.
And I said, man, if we get up here to the 50% retracement to this previous support, I'm gonna get rid of it, because that's a pretty good move. 60 pips, and when we got 60 pips in less than an hour, I took it off, but it continued.
Yeah.
and it really, I mean, it really continued going overnight. I mean, but I think you have to use this as an opportunity to be long the euro sterling, because how good are the fundamentals now? And we were just having this conversation in the ForexAnalytix chat room here. Let me show you. If you're in the ForexAnalytix chat room and you go over to, the conversations that we're having, here's Lucas and I talking about, the euro sterling and the fundamentals of it and how good it looks. These are the conversations that we have inside of our community. So, and I do believe that when you have a hawkish ECB and a Bank of England that really is voting to be more dovish. And by the way, I can't figure out why central banks, with the UK inflation where it's at, how they would vote against more rate hikes. It just doesn't register in my mind. But that is a clear and present, macro mismatch. So to be long the euro sterling makes a lot of sense. And I think that over time we could be trading way up here over the course of the next couple of months in the euro sterling. So that's one that I think everybody needs to keep an eye on. Hey, Stel, Steve, do you guys have any thoughts about that?
Oh, we talked about that on the Flow Show as well. And Brian asked me what I thought about the Bank of England and the pound. And I said, dovish and sell. And I still think the euro pound is a good pair to be long of. It's gone pretty quickly, so maybe a little retracement, but I think we're going to be heading towards 90 again. This range 83 to 90 is the range I've been looking at for a couple of years now, and I think we're going towards 90.
So how do you feel about like the dollar just in general?
The dollar in the short term, I think is going to grind higher. So cable in the short term, I think is a sell. But as I said before, I think the Fed, the US economy and the Fed are going to be leading again once more, and they're going to be leading on the downside. So I think the dollar is a buy in the short term, but as we get to 2023 and maybe towards February, I think it's going to be, I'm going to personally be looking for opportunities to sell the dollar.
Awesome. Okay. All right. I mean, I don't know where that's going to pop up, but it's going to be interesting to see. Like I said, I think that the dollar can see 108. I think, like Dale, we were just talking about, I think it can actually go higher. I think it can probably see 110. So it should be interesting. Hey, Dale, how do you feel about precious metals here? Because one of the like outliers today is gold, and gold's like holding up, and but I don't know if this is a product, and this is something this is why I wanted to bring it up. What has the silver gold ratio been doing for, like, it seems like forever, like, well, the last few weeks? What's the silver gold,
it's finally turned yesterday. It's falling wedge, but I think the top was made in gold for a pretty good pullback, maybe back to 1730. I'd like to see 1680 for a right shoulder. If you look at a daily or weekly, that's what we would get is, a right shoulder on the gold itself. But the gold silver ratio, I think, could rally pretty good here up towards 83 is important resistance, and above it, it's a breakout. So
because we were having this conversation just again in the ForexAnalytix community just like 30 minutes ago about, why is gold outperforming? I'm like, we have options expiration, but really I was thinking about it as we were coming back on, and I'm like, the silver gold ratio has just been, out of control for the last, couple of weeks. And you can see, we're seeing a bit of a reversal here. So, maybe that's a little bit of position squaring, where you had people on a pairs trade, buying silver, selling gold, and
recession, for a recession, it's the industrial part of silver rather than the monetary part.
You're right. So maybe, but I think you got to be careful with gold, especially with the dollar firming up. I mean, look, the euro's nearing that 106 level. And if it breaks 106, I mean, I wouldn't want to be long gold in that situation. We would see the dollar rallying. We probably see gold breaking through, some support, and we'd probably see this 1730 again. And that's the make it or break it for anybody who's long gold, in my opinion. We break through 1730 and it's going to be
if you
ugly.
look at a weekly on it, we could pull back to 1680 to have symmetry for a right shoulder. No, maybe it's a daily. Yeah, put the daily up. It's cleaner.
Oh yeah. I talked about this on the week ahead video a couple of weeks ago, and I thought it was going to happen, and maybe it still will.
Yeah.
Maybe we will see a move that looks like that. Yeah. I mean, I'm with you. I mean, could you imagine? I mean, gold, it takes so many longs to the cleaner here, but then again, a move in the euro dollar back to parity would clean out a lot of people that are extremely long the euro. I mean, isn't the commitment of traders right now and positioning very, very long euros at the moment?
Yeah,
it is, right?
Yeah, and sentiment on the dollar before yesterday was in the 20s, which we hadn't seen a DSI number like that for a while.
Yeah, so imagine imagine the euro just slumping like this and taking out just all the longs, all the late longs, and us getting back 102, maybe parity, maybe 101 in the course.
So
of
I'm thinking, it's all one market. How everything that goes up and down together, just different magnitudes. S&Ps make new lows, and whatever doesn't make a new low with the S&P is your buy. So that's going to be, I think, Euro and cable and Aussie, I don't think they'll make new lows, even if the S&Ps do. And that'll be your time to, short the dollar again.
All right. Well, hey, we got we have Grega Horvat here. So Grega,
let someone who knows something talk.
Yeah, let somebody who could draw some much better than myself. Grega, welcome. Good to see you.
Hey, nice to see you.
Hey, so I'm gonna let you take over the charts here, and what do you have that's really sticking out to you right now? And by the way, I have to say, Bitcoin's failure at 18,000 was a big deal this week. I think it was a huge deal. That was a big breakdown point. That was a huge reversal area. I'd be interested to hear what your thoughts are on some of these
sure.
Cryptos, the dollar, how you're viewing the euro right now. So what are your thoughts?
Yeah, actually, let me share the screen. Okay, so regarding the big picture, I will not just focus on this week's price action, but on a big picture, I still think that the US dollar will continue lower, and that the reversals that we are seeing this week is just a temporary corrections. I've been talking about this potential dollar rally already last week. And if we look at the big picture still, here we have 5 waves up on US yields. We are turning to the downside. It means that we are most likely stepping into a corrective phase. Can be temporary, but even if it's just temporary, we should see a 3-wave drop. So in my opinion, we are going to see more dollar weakness while the US yields have topped here. At the same time, other assets such as gold, silver will probably do very well in 2023. So looking at here at the TLT, which in my opinion is quite interesting here, notice that we have a very nice reversal to the upside. It looks like a very nice ongoing impulse because we have a pretty strong price action here in the middle. So what we are seeing now is probably some consolidation phase, and that's when US dollar could see some kind of recovery, like Blake said, back towards 110. I also think that's very possible, but I think this will be just a short-term moves. Okay, so I think that we are stepping into some near-term corrections, and the corrective wave that I will be tracking in the next, let's say, few weeks could be potentially this wave 4. We had a pretty nice strong breakdown here, as I showed you this chart already last week. It looks like that we're starting a new impulsive wave. So I'm not sure how far we can go here, but if you look here on the big chart, you can clearly see the comparison with this cycle that was up from 90s to 2001 highs. So if we just respect the short-term or let's say basic technical analysis, I think that we could see a continuation towards the lower side of the channel, and then let's see what happens there. So I think
he's making me nervous being short the euro right now.
Yeah, I mean, the short term, we will go to the euro. Just wait.
All right.
I'm just trying to show the big picture that may not have an impact on these short-term swings. So still, I mean that, as I said, in the short term, we could be rallying on the US dollar, as I said, because we probably are going to complete this wave 3 here. So looking also at the 4-hour chart, okay, you said 110, I believe. I think that 107 is very strong resistance that could be, that should be very, very important in this upcoming wave 4 bounce. We have also pretty strong divergence here on the MACD as well. So I think that this current cycle could be potentially coming to an end, as I said, and we could be stepping in this corrective phase. Also, if we look at the euro, since you mentioned, Blake, if you look at the euro here,
yeah,
again, very nice and strong move to the upside. Now, typically, you will see that wave 3 will be the strongest wave and could hit this 261.8% extension of wave 1. Okay, and we came pretty close here to these levels. And if you look at the substructures here, you can also count 5 subwaves. So it means that this bullish trend could be coming to an end. And so far we can see very nice spike in yesterday's sessions, which means that could potentially see a top in place and we could be dealing with a pullback. However, I'm not going to turn bearish on the euro. I just think that it could move sideways and make an ABC correction. But ideal support obviously would be at former wave 4, which is at 103, 102.30 level around there. So that would be ideal. So in the short term,
can I ask you, like, if like for me, I'm with you when you say, well, I'm not going to turn bearish the euro, but that doesn't mean for me I won't short it. I have a bearish bias, or a bullish bias, but I'll still short the euro, and pick it off, a couple of days at a time. Do you do the same?
Yeah, it all depends of what kind of a quality of this price action I have on the lower time frame. So if I see here potential completion of the 5-wave movement, well, I want to look what the shorter term picture is showing me. If I look here, okay, that was your spike yesterday when you said that you shorted. Well, I can clearly see a very strong intraday impulsive sell-off. So in my opinion, this is pretty bearish as long as we are holding that high. So I will continue to look for more weakness, since I think that we, at least as long as this high is in place, because I think that the higher degree 5-wave pattern has accomplished. So even if I look here at the short-term structures, and let's say that this is going to be just another correction, well, it's still only wave B. You are missing wave C to the downside. So I agree. Even myself, I took trade against the higher degree trend if I have enough of or very strong confidence that we have seen a top in place. But it really depends what kind of a price action we will get. As I said yesterday, it was pretty strong reversal. Now let's imagine that we also finish the week where we are today and we see stocks keep moving to the downside. I think that the next week we will see more dollar strength here. And it's pretty nice to see that you can define the risk, your risk pretty close here, because that.
Yeah, I was actually the chart I posted in the chat room is a head and shoulder pattern, and just you can see it there. Your B would be the right shoulder. So if it breaks through 106, then it's that's why you stick a fork in it. Hey, Grega, I want you to continue, since we have time today. I want you to continue analysis, but can I borrow the screen for a second? I got to do this for everybody. Let's see.
Sure.
Give me 1 second. If you guys and gals have, let me just do this. If you guys and gals have not had an opportunity, and this has nothing to do with the markets, by the way, Grega and everybody else, I'm doing today in approximately 3.5 hours, I'm doing a special webinar and a Zoom call for anybody and everybody. And this is for everybody. And we're not going to talk about the markets. We're not going to talk about ForexAnalytix. We're not going to talk about, prop trading.
Talk about health.
This is all about living a healthy lifestyle and a good lifestyle, and living a good life, and taking it from the mother of holistic medicine, Dr. Gladys McGarry. Dale, I think you should be there. I think you'll really truly enjoy her. She's really like an angel. She is honestly an angel. I got to tell you just really quick, when American troops were in Afghanistan, was it in 2006 ish? She was on foot at 85 years old, going village to village, teaching women how to self-birth. And so if you all like,
wow,
if you all are at certain ages in your life and you're like, oh my gosh, I'm, here I am, she's 102 and she was just riding a tricycle literally on stage a week and a half ago for a celebratory birthday for her foundation did for her when she turned 102. You want to meet a woman that really has inspired people all over the globe? Talk to the mother of holistic medicine. You'll be able to meet her on Zoom today in about 3.5 hours. And I'll put the link in the chat box. So back to the markets. All right.
Very
Thanks,
cool.
Grega. Yeah, it's all yours. Go ahead, Grega. Sorry about that. I just had to throw that out there.
Sure. Don't forget on the link.
Yeah, I'm going to put the link up right now.
And you need that if you're a trader because of the high stress lifestyle it is. So
yeah, totally. 100%.
Or you'll become like me.
Like all of us, right? Yeah.
Oh,
go ahead, Grega.
Yeah. Okay. Now let's also look at cable. Now, as you know, Bank of England was pretty dovish, and looks like that this is also confirmed by the price action. Here I have this hourly chart. So as we discussed with Blake earlier, if I also go sometimes against the trend, sure I do if I have the very good wave structure. Okay, and here is one example. You have a very nice wedge here, which was broken quite decisively. And notice that this reversal to the downside occurred with 5 waves, very clear, visible 5-wave movement. So that's an impulse. And always when we see this kind of a price action from a new high or from a new low in a bear market, this is your indication, your confirmation that temporary top is in place. Okay, so what it means that after a corrective recovery, you will see a market that will continue in the same direction of this first impulse. So I think that there is room for more weakness here on cable, at least in the short term. We are now trading at some support here at 121 level, but I think that we could continue towards 1.9, 1.2 psychological level after the next bounce. So if you look at the big picture here, that's the wedge that I'm talking about, and we are going to track this upcoming wave 4. So it could be the current pullback could be somehow similar to the previous retracements. You can see that there were pretty nice corrections here. So if we take the same distance, we come out with 1.9 level, which exactly comes in at this swing low here. So I think it's a pretty nice downward target for that could be triggered after the next bounce. So in the short term, as long as the market is trading here below 1.245, I think that there is actually opportunities on the short side, especially with the risk of sentiment that we are currently experiencing. Also, let's take a look now on dollar yen. We've been covering dollar yen last week. We said that potentially we could see dollar yen moving towards 140 since I said that we completed these 5 waves down. We are now in this corrective recovery. And I think that this still 140, 142.30 could be seen. Of course, sometimes corrections are very slow, but you will have to be very careful here because obviously your risk will be much much bigger if you want to be short here. So I'm still waiting for potential higher prices, and then a reversal from that 142 would be ideal. If we will see that, let's say in the next 2 weeks or so, then I would be willing to short this pair. But it's pretty clear wave structure here. I definitely want to look on the short side because we've broken this trend line pretty aggressively here over the last few weeks. So I think that we are now just in a corrective phase before we may continue much lower here. Next one, let's take a look on ASI. ASI has also very nice looking wave structure here. I am looking for a bullish trend, but notice that again, we are now just slowing down for a correction. So we completed this 5-wave rise from that low from October. So I think that this low will stay in place for some time, and that we will actually continue much higher after next or this current pullback. So where we will go? Well, normally when I'm trying to look for potential corrections or of this dip, then I would be looking for minimum retracement of the 38.2% before I want to see the price may stabilize. Okay, so we are still not there yet. And also notice that we are coming to the downside from a new high with the first impulse only. So again, that's still your only first leg of the minimum 3-wave drop that we should see till the correction is going to be completed, because corrections are always made by minimum 3 waves. Okay, so I'm waiting on these waves B and C to form. And in the short term, again, same like I said with cable, as long the market is trading below 68.95 level, I think that there can be opportunities on the short side. If we break this level, then the higher degree bull trend is back in the cards. So in the short term, I could be looking for potential shorts here. I tried 2 weeks back. I thought that this wave 5 has finished here. I was wrong there. I went out at the highs, but I'm willing to do it probably again next week. But on the longer term, I still think, as I said, that ASI potentially is bottoming. It could be much, much higher in 2023. I will show you these just basic technical charts here. Notice that this market came very nicely to the downside here. It tested this trend line, not tested, but came quite, I would say, close enough to this trend line, potentially made the right shoulder. We bottomed at the 61.8%. And notice that also we have pretty nice morning star formation here. So this goes very nice with the Elliott wave view, because as I said, on a smaller time frame from that low here, okay, we had these 5 waves up. So after the current correction that we were tracking, I think that much more upside could be seen here on ASI. Also, let's take a look on S&P. Yeah. I will just a second. Let me also share this view on gold.
No, now. I'm just kidding.
No, go ahead.
No, immediately. Okay, so gold, I think that earlier you discussed about potential right shoulder here. So yeah. I believe that's a left shoulder, potential neckline here around 1800. Now the right shoulder. Yeah, I mean, it goes very nicely with this Elliott wave setup. So I think that we are now in a wave A leg. So as you can see, same thing like on other majors. I think that we are just in the first leg of this corrective price action that we are currently tracking. And I think that very nice support comes around 1730. That's the first one. You had this spike here back from late November and high from October. So that's pretty important level. The next one should definitely be the 61.8%. So I think that for the next few weeks, maybe towards the end of the year, we could be just consolidating here. But as long as this market is trading above the recent highs, I think that there is a greater chance for deeper, much better supports to be retested. But in 2023, I think that gold could be much higher. If I look here on this chart, I think that this price action from 2020 is an ABC formation. We stopped at this trend line of this upper channel. So I think that there is a chance for more upside, especially as I said, 10-year US yields completed this 5-wave rise. So as long as that's the case, as long as US yields will hold the recent highs, I think that metals should do pretty well here. Let's take a look on S&P 500, as I said. Well, recently we tried to break this trend line. We failed. We came to the downside. In fact, when this breakout occurred, I also exchanged the wave chart with Blake in our chat room and said that potentially we are just seeing the failure break and that we should see wave C to the downside. So far, we are seeing a very nice reversal. And honestly, I'm not sure if this is just going to be a correction or are going to see a retest of the lows, because there are, in this very massive price action like this, unfortunately, there are just different multiple wave counts possible.
So you think we could see new lows from here, like below, like, 3,400 type
I will
of thing?
I will say like that. I will show you this for our chart. Okay. So if you remember, Blake, we I shared this image, right? I said that wave C to the downside.
Yeah.
Yes, it was yesterday. Could be in the cars because that was a wave B rally. Now, wave C of an ABC flat formation will typically find the support somewhere around or close to this wave A. So far, these wave A levels are already being broken. And if today, let's say we would just continue lower towards 3,800 and finish the week there, I think that we are going lower. Okay, so for me, the next will be very important, the reaction around the current levels. We will see a bounce, then I will immediately turn bullish. Because if you look at the daily candlesticks formation, you will see a very aggressive sell-off. So if the bears are currently in play, I want to see that this bearish price action from Wednesday should be fully retraced before I can say that risk on is back. Okay, so I want to see how the price will respond, will react in this current area. So if we suddenly drop towards 61.8, then I will have to bring on this wave count. Let me show this one, where I see the supports around 3,400. And that would be probably the ideal bounce for 2023. So unfortunately, I don't have a very good answer where we go from here. I just need a little bit of more price data to make sure where we could be headed. But if we consider what the US dollar is currently doing, just have to realize that maybe stocks have a little bit of room for more weakness here.
Sure thing. Hey, Grega, what, I might have missed this, and I might have missed your analysis on this, but where do you see crude right now? Because crude has been one of those really messy, instruments that there's a descending trend line that just rejected, and that's the same, trend line. I'm sure you probably see, it's up near $77. Other than that, it's like we're kind of hard to gauge where crude's going to be, and I don't know if, and it's going to influence how I approach like the peso and Norway and even the Canadian dollar to a certain extent. So how do you see crude right now?
Well, we talked about this wedge line support last week. We came higher pretty aggressively here. And honestly, it looks like we completed this wave 5 here. So again, today's price action, it's Friday. So we will see if we can hold these levels around 73. If yes, then I think we could see more upside going into the next week. But again, dollar is the problem here. So also looking at dollar Mexican peso, you will see that there we have a very nice 5 waves up, yes, actually. So this suggests this actually goes against the bullish crude oil, right? So I think that the crude oil could either go a little bit lower or stay choppy here. So for a bullish case, I think that we just have to see, as I said, maybe a bounce from 73, 74 and break above 77 would be very, very bullish for crude oil. So that's probably the important level that we should focus on regarding the bullish picture here.
Okay, sounds good. Well, Grega, I want to say thank you so much for spending time with us here today on a Friday, and I want to say Merry Christmas to you and your family. I mean, Yeah, he's and you know, Grega's got some cute kids, but they're almost getting out that age where you know, you have to just kind of give them money. You don't give them gifts anymore, right? You just give them money. Well, are you at that point yet?
We are not there yet.
Oh, okay.
Yeah,
give them silver coins.
They're 8 and 9, so.
Yeah, that's true.
Okay.
You still got a couple more years of fun times here with right now. You know, it's not as exciting as a for me, you know, having late age teenagers that are just like, you know,
but he wants, I mean, son wants obviously PlayStation 5 and so on. So yeah, we are slowly getting there.
Are you sure dad doesn't want that?
Yeah.
Hey, I want to say, Dale, thank you for another great week. Grega, Steve, Stelios. I know we're missing our European guys because they're out right now, I think, shopping with their families, doing some holiday shopping, Christmas shopping. I just want to say thank you, everybody, for being with us this week. It's been a great week, jam-packed week. We managed to get through it, and I think we managed to get through it pretty profitably. So I'm excited. I'm happy about that as we wrap up the new year. We will be broadcasting next week, guys. We'll kind of hit you on Monday what our schedule is going to be. You know, obviously with the Christmas holiday next weekend, we'll probably be broadcasting at least for the first few days of the week. But I know the European crossover, those guys are going to be tailing off after the first show or two next week. So just make sure you guys stay tuned. We will all be here on Monday, so we hope to have you here as well. Have a wonderful weekend, and Dale, it's to you, man.
All right, well, everyone, don't just count your pips, which you should have some to count this week. Count your blessings, and thank you, team, for another great week, laying it on the court. Grega, always great to have you crystallize things for us, and the best webinar, free or paid, on the net. That's my belief. Become part of us in 2023, either through the Trader Funding Program or as a subscriber, and have a great year being part of a excellent community of people that really care, and they're very talented traders. We demonstrate it every day. So that's a wrap, everyone. Enjoy your weekend, recharge, and I hope to be in better voice next week. So
yeah. Get better,
adios,
Coach. Thank you.
All right, adios. Thanks, Blake. See you, team.
Happy holidays,
bye.
Everybody.
Yeah, bye, everyone.